Hello, welcome to today's Law Awareness Talk on Life and Medical Insurance, jointly organized by Law Society Pro Bono Services and Financial Industry Disputes Resolution Center, or FIDReC for short. My name is Liyen and I am your host. Do you own a life or medical insurance policy, or are you planning to get one? If so, this webinar is going to help you better understand your insurance policy and the common problems that arise from such insurance policies that you should be aware of. Now, if you have a dispute with an insurer about a policy, we will be addressing these issues at today's webinar. Some housekeeping before we get started. Relevant materials relating to today's talk can be downloaded from the handouts pane on your screen. If you're using a mobile device or a tablet, it should be at the top right-hand corner of your screen. And if you're using a computer, it will be in the control panel on the right hand of your screen. Please download these useful materials before the end of this talk. Feel free to ask any question during the webinar using the questions pane in the control panel. Your questions will be seen by the organizer only. We will do our best to address them during the talk or at the end of the talk. Please be reminded that this discussion and any material provided in the webinar is not intended to substitute any form of professional legal advice. You should consult a lawyer if you require specific legal advice. So with that, I'm delighted to introduce our panel this evening. On our panel today is Ms. Eunice Chua and Mr. Francis Goh. Ms. Chua is the Chief Executive Officer of FIDReC. Prior to this, Ms. Chua was Assistant Professor of Law at the Singapore Management University School of Law. And in her 12 years of legal practice, Ms. Chua served as Assistant Registrar at the Supreme Court, Magistrate of the State Courts, and she was also Deputy CEO of the Singapore International Mediation Centre. Mr. Francis Goh is Head of International Arbitration at Eversheds Elias, and also Head of its Private Client Advisory Practice. In his 29 years of legal practice, Francis has represented clients in the Singapore court, in various international arbitration tribunals, as well as in mediation. Francis is a principal mediator with the Singapore Mediation Centre, a specialist mediator with the Singapore International Mediation Centre, and he is also an adjudicator on FIDReC's panel of adjudicators. So Eunice and Francis, a very warm welcome and thank you both for joining us today.
Thank you, Liyen. It's a pleasure to be here.
Thank you. Glad to be here.
Oh, we're very glad to have you here. Before we begin our talk proper, let's launch a poll to find out why our participants are here today. Please take a moment to do this quick poll by clicking on the answer on your screen. Let's give our participants a few more seconds. Okay, we will be closing the poll shortly. And 83% of you have answered that you are here because you want to find out more about life and medical insurance. A small percentage of you want to learn more about FIDReC, and also because you might be having some issues with your current life or medical insurance policies. So this is the right place for you. And I'd like to begin our talk today by asking a question that most of us assume we know, so we've never really asked, I think. I believe that for most of us, we are first introduced into the insurance landscape, probably when we first step into the working world. If you're like me, you know, we are approached by a friend or a family member, perhaps an aunt or an uncle, who have become insurance agents, and we then feel obliged to purchase an insurance policy from them. So I don't even remember what my first insurance policy was. I still don't. All I remember is a family friend told me that, oh, now I am earning a regular salary, I should be purchasing an insurance policy, and years down the road, I will be very grateful because I would have accumulated a lot of savings. And I took him at his word, and now it's sitting somewhere in my drawer. But what really is insurance? What does it cover, and why do we need insurance? Francis, would you like to start us off?
Okay, that's a very broad, kind of area, but let me try to break it down to some basics. First, what is insurance? Insurance is a contract. It's a contract between you and the insurance company. What you do is you pay a premium. It could be on a monthly basis or an annual basis. In exchange, the insurance company says that they'll take this premium and they will cover you in the event of certain events happening, such as passing away, such as a medical condition or an accident, or if you're buying a specific type of policy for your child's education that matures in 21 years upon the passing of that time. So think of it this way. Insurance helps you to leverage the amount that you're prepared to set aside as a savings. And then with the benefit of compounding, they then try to accumulate what they call a return for you at the time that the event happens. Okay, so it's basically a contract for returns.
So would it be fair to say, okay, so let me just ask the question the other way. I mean, how is that different from if I faithfully set aside a fixed sum of money, from the time I start work till my old age, knowing that I intend to use that sum of money to help myself, say, in the time of a medical crisis? I mean, there is more security because that's my money. I set it aside every month. I know exactly what I intend to use it for. How is that not the same as getting, say, an insurance policy?
Okay, typically how they pitch it is like this. If you are prepared to say set aside $200 a month, faithfully set that aside for the next 10 years, what you are going to get is this 200 times 12 times 10 as a pool of money that's available for you to use for, say, in your case, a medical condition. But what insurance claims to do is that they will take that $200 per month premium that you're prepared to set aside. They then sell you a policy where they say that in the event of a medical condition happening, they are prepared to cover you for many times that amount and for different types of conditions. Then, of course, people may wonder, how is that done? That's done through what they call aggregating all the different premiums that they collect over time from all the people that are buying insurance. They invest it, they have their returns, but essentially they are contractually bound to honor that contract that they have made with you in exchange for your premiums.
And so, understanding that therefore it is better, why do we need insurance? Do we all need insurance?
Yes, I think insurance is necessary. It is also useful in the sense that it helps the common man leverage their limited resources to actually save for a rainy day, save for a child's future education, maybe build a nest egg in times of retirement, and in the event of death, in the event of medical conditions hitting them, they then have financial resources paid out by the insurance company to help them tide over those difficulties. So useful to have insurance, but the problem is many people don't know what they are buying. And that's where I think the source of the problem really comes down to that needing to understand what they are buying.
That's true. And what about Eunice, for FIDReC? Do you find that there are particular types of policies which give rise to more complaints by consumers?
Yes, Liyen, that's a very good observation. So at FIDReC, actually 39% of all claims coming to FIDReC come from life and health insurance policies. So this compares to maybe about 16% that relate to general insurance kind of policies. So life and health insurance are actually big sources of complaints for us at FIDReC.
Okay, that's good to know. And, as you said, now there are more and more complaints. Moving on to the next slide, there are also more and more insurance companies and more people selling insurance. So I think this next question is something that, many of us as consumers would be concerned with. I know now that banks have jumped on the bandwagon. Sometimes you may find your relationship manager or banker selling you a product that later, really significantly resembles an insurance policy. On top of that, there are many insurance policies or companies who have started to operate online. I, for one, have purchased a MAID insurance policy online from a company that I had never seen before. So, and I also read in the March issue of Forbes that with COVID-19 now, many people across the world are actually very concerned with health insurance. So there's been a huge jump of people purchasing health policies as well. So in the Singapore context, how do we know if an insurer is reliable? Francis, would you like to start us off?
Well, I think what is important for all the consumers out there to understand is that the insurance industry, and the insurance industry goes by various names now. They talk about insurance agents, some call themselves financial advisors, people talk about financial planning. But I think basically for the consumer, what they just need to understand is that this is a regulated activity, regulated by the MAS. So whether it's a bank of a financial institution, if they are reputable and are doing business in Singapore, they would be registered. Now, how can the public know? There is something called a financial institution directory. There is also an MAS register of representatives. These can be checked out on the MAS website. If you are dealing with a representative or with an institution, they should be listed on that register. Otherwise, you should have a serious red flag as to who you are dealing with.
Okay. What about, are there other ways of knowing how else, I can, is there sort of like a central place that I can go to determine if it's safe to purchase a policy from a particular insurer?
Right. Now, because the insurance and the financial institutions are regulated, so you can have that confidence that at least in the Singapore context, these institutions are good for their word. So a contract with them is likely to be honored. Can't say the same through the internet age now, where there are a lot of other agencies that are coming on board and they may try to sell you something online. I think it's important for the public to actually go to the MAS website and check out whether these entities are registered. And one quick giveaway is also to take note that all of these entities that are registered with the MAS also subscribe to FIDReC. And so maybe Eunice, you can tell us more about it.
Sure, thanks, Francis. So MAS requires all licensed financial institutions who have dealings with consumers to become members of FIDReC. And this is because in the event that something goes wrong, at least these consumers have a place to go to that is affordable, that is accessible for them. So FIDReC, and maybe we're jumping to the next slide now, Liyen, but, so let me just
No,
touch
that's
on.
perfect. Yes. Yes.
So FIDReC, we offer an alternative dispute resolution service. This means that if you have a problem, you don't need to go to court, but you can come to us and we will provide services to help you to try and resolve this dispute. So we have this two-stage process which starts with mediation. So when a consumer comes to us with a difficulty, they will file a form, we call it a dispute resolution form, and one of our case managers will review the case and then have a discussion with the consumer as well as the financial institution to understand what happened. During this process, we will try and facilitate discussions between both parties. The aim here is to be able to amicably and effectively settle the dispute in a way that both the financial institution and the consumer is comfortable with, not, limited by what the law would provide, but what, two negotiating parties can come to agreement on. And if mediation isn't successful or produces an outcome that is not satisfactory to the consumer, we then offer another stage that we call adjudication. And this is where, Francis is an example of one of FIDReC's adjudicators. So experienced lawyers or retired judges, retired industry professionals, they will hear the case and then decide on who is right and who is wrong. And under FIDReC's rules, the financial institutions must comply with any decision made by such adjudicators.
Okay, so does FIDReC, so from what I understand, any consumer with an issue with an insurer can come to FIDReC. And how that works is we file the dispute resolution form. So just to clarify, you mentioned earlier that once the case manager takes on the case and speaks to both parties, then you bring them together for what is called mediation. Now, as a consumer, do I have to pay for that?
So our mediation service is free of charge for the consumer, and the financial institution will pay a small fee of $50 plus GST.
Oh, okay. And what if I cannot come to any agreement? I mean, if I feel cheated by the insurer, most likely they are not going to budge, right? So what then happens when the mediation falls through?
Well, at FIDReC, just to share, in our last financial year, we actually managed to close 85% of cases at mediation. So actually, mediation is a process that is very effective for us. Out of these cases, not all of them come to some kind of a settlement agreement, but then the mediation also has other functions. It enables the consumer to speak directly with a representative of the financial institution. There's often frank discussions. There can be detailed explanations of your policy and what can be done with it. So this process of even gaining information sometimes adds value to the consumers. And even though there is no settlement agreement, they don't take things further to adjudication. But if they need to, adjudication is there for them and available to the consumer at a fee of $50 per claim. And the per claim portion is there because one consumer might have multiple policies. And so for each policy, there is a $50 charge for each. And this is related to FIDReC's jurisdiction as well, because under the MAS setup of FIDReC, we can handle cases up to $100,000 per claim. So this means that if you have multiple policies, you can bring claims against the insurer for each of these policies, and for each it is up to $100,000.
Okay, and so so let's say I have a claim against an insurer for maybe not paying up on an insurance claim that I made, right? And the mediation fell through. I pay $50, and then an adjudicator hears the claim, and I don't have to pay any more. It's a $50 flat fee, because when you appoint lawyers, they tell you X dollars, then after that disbursements and additional fees, and the next thing you know, more often than not, people find that their legal costs tend to be higher than what they were originally informed, or at least the impression that was first given to them. So how does that work at FIDReC?
Well, at FIDReC, in line with keeping things simple, it is a $50 per claim flat fee. There is nothing more to be charged. Yeah.
Okay. So one final question before we move on. Two, actually. One, how binding is the adjudicator's finding? I mean, what if the insurer is not happy with whatever the adjudicator has decided, and then after that, it's a waste of my time as a consumer. I still have to go to court, maybe to enforce or something. And the other question would be, tell us more a bit about the adjudicators on FIDReC's panel. I mean, how do I know if these people who are going to hear my case, I mean, they are not judges in court. So how do I know that these people will sort of have the expertise and the ability and the professionalism to make a fair assessment of my case?
Okay, so starting with the enforcement question, Under FIDReC's terms of reference, all the member institutions have agreed that if there is any decision by the adjudicator, they will abide by that decision. And if they do not, FIDReC has the ability under our terms of reference to take this matter up further with them. We have actually a very good relationship with the financial institutions as well as with the Monetary Authority of Singapore, and there is regular reporting that we have to do. So this is one mechanism that makes sure that the financial institutions are held accountable because MAS requires us to report on each time there are any non-compliance by the financial institutions. And on the so on the second question about the quality of our adjudicators, I want to reassure everybody that our adjudicators are independent. They are appointed by a committee of the FIDReC board, which is made up of a majority of independent board members. So independent means that these are people who are not having any interest or any employment with any financial institution. So a committee of the board have objective criteria. All adjudicators must fulfill certain requirements like at least 10 years of relevant experience in a relevant industry. So for instance, law or finance. And there is also a qualitative element where the committee must be satisfied that the adjudicator has the necessary demeanor, stature, ability to conduct a fair hearing for the consumer. So this is a check that we have in place to ensure the quality of the adjudicators. And I wonder whether Francis has anything to add on that point.
Well, I can assure you that it's a very stringent process. And, we are all very happy and relieved when we are chosen to serve on the FIDReC board.
Okay, that's good to know. I mean, as a consumer, I think it gives us some assurance that there is somewhere that we can go to for professional help that, is very cost effective. And the process also very clear. So yeah, that's very assuring to know. Now, I think for the benefit of our participants who have either just joined us or are curious about whether some of your concerns will be addressed, this next half of the talk, what we will be talking about are some of the common issues that you will encounter in your insurance policies, typically things that as a consumer like myself, we were not aware of, and then issues arise later. We will be talking about mis-selling and misrepresentation. We will talk a little bit about what happens when you fail to disclose your pre-existing condition. We will talk a little bit about exclusion clauses and also how to read the terms of your insurance policy. So without further ado, I'd like to move on and discuss this issue about misrepresentation and mis-selling. Now, I understand that the purpose of today's talk really is to provide guidance to the layperson like myself so that we can better navigate this rather complicating landscape of insurance and to prevent disputes from arising in the first place. So I know that mis-selling and misrepresentation probably is one of the more common issues that I think FIDReC faces when it comes to claims by consumers. Would that be fair to say, Eunice?
Yes, so mis-selling and misrepresentation are traditionally one of the top 3 claims that are brought against insurance companies. Mis-selling really refers to some sort of a problem that has arisen in the process of the selling of the insurance or of the recommendation of that particular product. So for example, it could be that the product is unsuitable for the risk profile and the financial needs and requirements of this particular consumer. This could lead to a claim of mis-selling. Whereas misrepresentation is quite specific. It refers to there being some kind of false statement that is made by the financial advisor to the consumer, and this leads the consumer to enter into a policy, whereas if the consumer had known that this was not true, the consumer would not have actually entered the policy.
Yes.
Okay. I've just received an interesting question from a participant, and I think it deals with the FIDReC question, or rather the FIDReC slide that we had earlier. So before we go into a scenario which will then help us better discuss mis-selling and misrepresentation, let's talk about this question that a participant has raised. It says here, it was mentioned that FIDReC can handle a claim of up to $100,000 each. But if someone has 2 or 3 claims from the same insurer, would it be easier and more effective to combine the claims even if it exceeds the total amount stipulated? So I think what this person wants to know, if it's the same insurer and he or she has a few policies, would FIDReC allow for the claims to be combined? But then the other question that follows is if one of those claims is unsuccessful, would it then become an indicator of the outcome of the other existing claims? So there are a few questions in there. Yeah. Maybe
Okay.
Eunice, you would like to deal with that. Yeah.
Okay. In FIDReC, it is quite common that a consumer might have multiple claims. This doesn't mean that you have to bring 3 separate cases, go through 3 separate mediation processes, 3 separate adjudication hearings. So your 3 claims, especially if they're against the same insurer, can all be dealt with together. So in terms of whether there's one process or multiple processes, there is an option where we can have everything dealt with together, where they are very closely related. In terms of how this plays out for how much you pay, as I mentioned earlier, the charging is per claim. Mediation, you don't have to worry because mediation is free of charge. But if you go to adjudication, where claims are related, often we would recommend to the consumer to bring all 3 at the same time, right? Especially if how the adjudicator might decide is actually influenced by the full picture. But actually, consumers have a choice because we do have certain instances where a consumer says, what I will want to do is I just let one of my claims go to adjudication first, and then I will abide by that decision for the rest of my claims. This is something that the consumer can choose to do if he or she thinks that this is the better way.
Okay. So to that extent, I suppose they will be advised during mediation as well, and then they can make that decision for themselves.
Yes, we will help the consumer to understand what are the implications so that they can make the best choice.
Okay.
Let me just jump in here, Liyen.
Yes, please.
My encouragement to all of the consumers listening in is not to worry about trying to predict outcomes or worry how FIDReC will handle the matter. You owe it to yourself to just go and ask FIDReC. The people there are helpful and friendly and will be able to advise you what's the best to do. And in relation to outcomes, speaking from my perspective as an adjudicator, I would simply say this: each case or each incident will have to be decided on its own merits. That's a simple way of saying we will look at the information given to us and decide on what is a fair and just outcome. It doesn't mean that just because you have 3 claims and it's against the same insurer, therefore one claim will affect the outcome of another. It really depends on your fact scenario. You may have, for example, the same insurance company involved, but your insurance policies were bought different times, a few years apart. So in a scenario like that, the chances of one claim affecting another claim, it may not be the case at all. So don't prejudge your case. I would say when in doubt, just go and see FIDReC.
Just bring it all to FIDReC.
Yep, that's what they're there for. And
The dispute
Eunice and her
resolution.
team would be most capable to help you.
We'll do our
Okay.
best.
Okay, so let's move on to the scenario that we were about to deal with. I think it might answer some of the questions that our participants have raised as well. So let me describe the scenario a little bit more. Let's hypothetically say Mary was an administrative assistant and she would be retiring in a few years. So one afternoon, she was approached by John, a financial advisor, at a roadshow. And then John tells Mary that to save for her retirement, she should convert her savings account in a bank into a savings policy that could earn her a higher interest of 3%. I mean, we all know now that you put your savings in a bank, you're earning less than 1%, practically negligible interest. So, of course, Mary was keen. She heard John say that she could draw or save yearly for a maximum of 15 years. She buys the policy, and some months later, she finds out that actually it's an insurance plan and that she would have to pay monthly premiums of $1,000 for every month for 15 years. And more importantly, she realizes that she wouldn't be able to draw out her money whenever she needs it. So now Mary feels that if she had known it earlier, she wouldn't have purchased this policy. She feels a bit stuck with it. So at this point, without discussing, whether or not the law behind it, what can Mary do? Eunice, can she just come to you with her policy and tell you the story? Can she come to FIDReC with her claim?
Yes, she can come to us, but what we will say to her first is the first step is always to approach the financial institution directly to see whether they can help in any way. Because if you can resolve it directly with the financial institution, this is the best for you, the consumer, right? You save yourself a lot of time and effort. You can already come to a satisfactory outcome. So go to your financial institution first. If after 4 weeks they don't give you any response or they don't give you a satisfactory response, at that stage, FIDReC can handle your claim. So you can convert to your inquiry at FIDReC into a claim by filing a dispute resolution form at FIDReC. We will review the case, and this scenario that comes to us is something we see quite often. We will then first clarify with you, the consumer. We will ask Mary, for instance, what are the documents that she has with her, right? Is there any record of what was said during the sale of the product to her? Were there any emails or messages exchanged, right? We will try and find all this out from Mary. We will then go to the financial institution and ask the financial institution for a report. So all financial institutions are required by MAS to have an internal process to handle complaints. And they will have an independent unit within their institution to review the complaints. And they will often conduct interviews. They will look at all the documents that have been signed by the complainant or not signed, right? And then they have to submit a report to FIDReC to set out what their view of the situation is. So in this
Okay.
scenario, we would hear from the financial institution, perhaps, let's say, for example, their report says, oh, they have interviewed John, right? And John gave a statement to say that when he sold the policy to Mary, he had explained to her, right, that this was an insurance policy, that there is a period where she cannot take out any money without any penalties. If she wants to take out, there will be penalties, right? So John could well have said all this, and then the insurance company could also attach all the documents that Mary signed, and these documents could well say that there is often a financial needs analysis that all the insurance agents will have to ask the consumer to go through before they recommend a policy. So this document will have information about Mary's income, her needs, her expected expenditure per month, and based on all this information, the advisor gives a recommendation on a suitable policy. So assuming all these documents are in, right, FIDReC will then try and arrange a meeting, whether maybe it could be a telephone meeting, it could be an in-person meeting. Now with COVID-19, it could even be a video conference meeting, where we try and facilitate a discussion. So often each party will have their own perspective on the issue. So very often the consumer will feel very aggrieved because they do feel cheated, right? They have certain impressions and they have certain expectations. And then
Yes.
we allow the consumer to voice that directly to the insurance company, and the insurance company can make their response and give their explanation. So it is during this process that we try and see whether there's a way to solve the issue. Perhaps in some cases, insurance policies have various options. There could be a term of 10 years, it could be a 15-year. So it might be possible to negotiate with the insurance company to say, I convert my policy to one which will have the payout sooner than 15 years. So I bring it down to perhaps 10 years. Or if I can't afford the policy.
Okay, I'm sorry to interrupt, but I didn't realize that that's possible. So at mediation, I thought that she's stuck with this thing and what's she going to do about it, right? So at mediation with FIDReC, it is possible for parties to come to an agreement that might involve a substantive change of the contract.
It is possible if the insurance company allows it, because the key at mediation is that both must agree, right? So this is where
Mm,
mediation can bring about some kind of unique outcome. Another way that sometimes insurance companies offer is to reduce the cover. So if the complaint here is that the premium is not affordable for me, given my
mm,
circumstances, perhaps the insurance company can lower the cover, and because the cover is lowered, the premium will also be lowered. So these are
mm.
ways that offer some possible solutions to the consumer while they retain their insurance policy, which gives them the benefits we talked about earlier.
Mm. Okay, that's very useful to know, because I think it assures someone like, consumers. I mean, for me, when I read of Mary's scenario, it really, I think of my
Mm,
aunts. I think of school teachers. They want to retire early. They've amassed some savings. It's not a lot. It's not very little. And of course, you tell her 3% interest, every auntie is going to jump at it, right? So it's good to know that when you start to panic, when, in her case, some months later, when she realizes, it's good to know that when you approach FIDReC, there are options that maybe on the face of it, you didn't realize that you could have. And so
mm.
with some opportunity to discuss with your insurer, you may arrive at something that, like you said, is more suitable for Mary. But taking
Yes.
it a bit further, right? Francis, maybe let's talk about what Mary should have done from the beginning at the roadshow. I mean, I feel very much for Mary, because look,
Mm.
we all have family members or relatives, right, who purchase insurance policy. How are they going to know what to ask? You walk out, this young man, he's cool. Then he says, Auntie, you know why you want to earn 0.5% interest, right? 3% is so much better. And how at that point is Mary going to know what are the things that she should look out for, or what she should express, as her needs and her wants to the agent, to ensure that she, from the very beginning, avoids dispute by getting something that is far more suitable for her. So,
Mm.
shall we talk about that a little bit?
Okay, let's dive in. Now, basically, key takeaway from what Eunice was saying is that basically, even if you run into a problem with your insurance contract, you can still go to FIDReC, and there will be creative ways that we can actually help to resolve the issues. Okay, but now to Liyen's point, what can you do to be a smarter consumer? All right. I think first and foremost, look at the scenario. She's bought it at a roadshow. Essentially, this is called buying in haste, buying on the spur of the moment. And, insurance agents are trained to spot people who have needs and concerns, which they could then zero in, because obviously they also want to close the sale. But if you were listening to Eunice earlier, she says that as part of the FIDReC process, they actually ask for the documentation which the insurance company or financial advisory company has taken down as part of the onboarding process. This is an
Mm,
MAS requirement, and I think that is where a consumer can use this to the advantage. Understand that when this handsome young man comes up to the auntie, she doesn't need to feel intimidated by his questions, but really the answers that she gives are supposed to be recorded as part of his information taking process. So, as an
mm,
adjudicator, if a case comes to me, I would be looking at that information taking process to see whether the boxes were actually ticked, to see whether there was anything taken by the agent to ensure that the auntie understood what she was buying.
mm,
Okay, so by all means, answer the questions, even if it's at the roadshow. But one important thing that I want to leave with all the consumers who are listening: Singapore insurance policies have a free look, a grace period. I think the standard is usually 14 days. It may
mm,
vary according to the contract, but that is an industry standard. So even if you have bought a policy, don't just throw it into a cupboard and forget about it for a few years. You should actually review it or take it to a family member and say, tell me, what is this all about, if you're not fully aware. And as Eunice pointed out, your first port of call should always to be going back to that insurance agent or to the insurance company that sold you the policy, and ask them within this grace period to explain to you what you have actually bought. And until you're happy, you shouldn't continue with that policy that you have bought. So these are some of the practical self-help things that any consumer can adopt. Understand what you are buying, understand the process, use that to your advantage, because obviously the more detailed your answers are, the insurance agent ought to have recorded that down, and that would be used to your benefit later if disputes arise. And make use of the free look provision.
I think that's helpful to know. So because if, I was about to say earlier that, look, it would be difficult for many of the consumers like Mary to, having been, I was going to say accosted, but that's not kind, but, if they were stopped at a roadshow and they might have been persuaded to purchase a policy that really actually is not bad for her, right? It's just that maybe she can't keep up with the premiums, or she wasn't aware, like you said earlier, that she couldn't take out her money earlier, stuff like that. So it's good to, I think, remind ourselves as consumers that even if you've made that mistake earlier, that's fine. When you receive your policy, one very good thing to do is to either get the insurance agent or a family member to go through it with you, so that we will better understand what it is that we've bought into. And I think later on, towards the end of the talk, we'll also be talking about important terms in an insurance contract that we should look out for. But on this topic of mis-selling and misrepresentation, one participant has asked a question that I think is probably quite a common issue when it comes to misrepresentation. So let me just talk about what this participant has raised. He says here, I'm not sure if it's a he or she, but let's see. This is about projected returns. So he says here, insurance companies previously project returns at 5 to 8%, but this was not achievable. Many people were cheated. Now returns are typically reflected at 3.25 to 4.75%. And the agents, this is a good point. He says here the returns for 3.25% and 4.75 are actually very different. But agents always show the best case of 4.75% in the benefits illustration, as if it's a given. So is that considered cheating? And how do we find out what are the insurers' track records, since they don't publish these things? I think what he means is, how do I know if the insurer is able to meet this 4.75% attractive returns that appears in the benefit illustration? So would that qualify as a misrepresentation? And then if it does, what happens?
Okay, maybe I'll start by saying a little and then turn it to Francis. Okay, so we often do get these kinds of complaints about a consumer feeling cheated. They expected a certain return but didn't get it. So in these situations, our experience with the mediation process is we often discover that the benefit illustration was shown to the consumer, and the consumer has signed on it to show that they understood it. It is a MAS requirement that the benefit illustration would show you clearly what are the projected returns. And if the return is a guaranteed return, it says that it is guaranteed. And if it's projected, it would say there that it is projected. So this is often something that the consumer has to struggle with if they wanted to, if they couldn't come to a mediated settlement and they want to bring the case to adjudication. It is this conflict between what they understood, right, and what they appear to have signed. So this is one of those situations where it is very fact specific, like Francis said. It really depends on what you can show the adjudicator. What exactly was said to you? Were there something, emailed to you to say that, oh, you can actually, just focus on this section. You don't look at the rest of the benefit illustration, for example, right? So each case can be quite different in that respect. Yeah, but turn to Francis. I'm sure he has more to add.
Thanks, Eunice. Well, okay, let's look at a couple of things. A misrepresentation would happen if the agent were to tell you in the process of selling you the policy that you will surely make, you know, 4 point something percent because it is shown on this projection. Now, that would clearly be a misrepresentation because that's false. Mis-selling is more of a situation where you are trying to save, for example, for your retirement. So to you, it is important that you are able to meet a certain pool of money in X number of years in order to achieve your savings goal. But then you have been sold this policy whereby it's an estimated or a projected return. And then when you need the money, you find that actually it fell far short of your saving goal. So that's just to give you an example of what misrepresentation and what mis-selling might be. But to the specific point, it is not a question of whether you were cheated by the agent or not, because as Eunice mentioned, MAS has got a very stringent onboarding process, and the agents are actually bound to go through specific explanations and obtain sign-offs from the consumer. Very often, what I find is that the consumer just blindly signs away and puts his signature based on a rough impression created by this agent. And that is something very dangerous. And therefore, it is something that as a consumer, you need to come to terms with. Even if in the onboarding process, you were rushed, you signed, you decided that you were just going to take the word of the agent, you still owe it to yourself to read your policy and use that grace period to decide whether what you have signed for is really what you intended to buy. And that little bit of effort on your part will help you to save a lot of time and trouble and heartache down the road.
Yeah, I think that's excellent advice. And I think for consumers also to remember that projected returns means projected lah, not the same as guaranteed. So, I think we probably need to focus on the guaranteed returns as an understanding that that would be the minimum.
Let me just jump in here to kind of give an additional nugget to our consumers. Understand that insurance has a specific function. You are paying a premium in order to insure for payouts in the event of certain things happening, such as a medical crisis, 21 years where you can cash out for education for your child, and of course, in the unthinkable, when you pass on, then there is some money that's left over for your family. Where the problem that our listener encounters comes when they try to marry the insurance function with the investment function. And that's where things start to get a bit messy. So the question that each consumer should ask would be this: are you yourself able to invest your money and make better than 3% returns, or whatever is being told to you? If that is the case, then you tell the insurance agent, don't sell me an investment product, just sell me an insurance product. You might be pleasantly surprised to find that the premium for the insurance product minus the investment element actually turns out to be cheaper. Okay, but that's a topic for another day, food for thought.
Okay, so let's move on. We've got some interesting other topics to discuss. Let's talk about the non-exclusion of pre-existing conditions. Now, also in this discussion, we will be looking at a scenario, but I would assume that something like that typically applies to life and medical insurance policies. Would that be fair to say? Yeah.
Yes.
Okay, so let's look at the next slide where we have a scenario of someone facing this issue. scenario B. So, due to recent updates by the government, right, from MediShield to MediShield Life, Peter decided then to upgrade his MediShield Life to an as-charged plan with insurer A, on the advice of an insurance agent, his friend, of course. So under this as-charged plan, medical expenses, including co-insurance and deductible, will be fully reimbursed. It would cover A ward types as well. So it looks very attractive. After the signing was completed on the application form, the agent Jane stood up to leave and Peter walked her to the door. Peter is the guy who's just purchased this insurance, right? Jane noticed that Peter wore very special shoes and she asked him about them. And Peter said he had some discomfort and pain in his toes, so he needed this type of shoes. And then a few months later, he submits a claim for surgery to his toes to insurer A, and the claim was rejected on the grounds of non-disclosure. So as a background, listeners should be aware that MediShield Life is a basic health insurance plan administered by CPF Board. So in this scenario, we are referring to Peter purchasing a private integrated shield plan from insurer A. So in this kind of a scenario, keeping that in mind, Eunice, I reckon you would have come across claims like that at FIDReC.
Yes, you're right, Liyen. The thing about insurance, and Francis has mentioned, it's a contract, and insurance is a special type of contract because it requires the person buying the insurance policy to make full disclosure. And this is part of their obligation in order to secure that insurance cover. So this is where this obligation to disclose comes about in the first place, and where if you had not disclosed certain conditions that you have, when the time comes to make a claim, things can go wrong. The insurer, for example, can reject your claim on the basis that, this was something that you should have disclosed before you entered into the insurance contract. So in this situation, if this case should come to FIDReC, again, we would have to go through our fact-finding process to try and find out more. So at that stage, when Peter entered into the policy, what was the situation? Did he have any medical reports on the status of the pain and discomfort in his toes, right? What does the policy actually say? Because different policies have different ways of phrasing similar kinds of obligations. So under one policy, an insurer might be able to reject on the basis of non-disclosure, depending on a very broad situation. So as long as you display certain symptoms, you should have disclosed them, right? Whereas other insurers might not have that same broad kind of understanding. So we will have to look very carefully at what the policy actually said to find out more about whether this kind of condition should have been disclosed. We will also have to find out a bit more from the insurance company when we obtain the investigation report, why Jane didn't say anything, to Peter when she noticed that there was something odd about his shoes, right? Was there some reason? Was there any promise made by Jane to Peter at that stage about whether he needed to disclose and whether it was important to disclose, right? We will have to find out all this in this mediation process to try and help both parties see whether there is any scope to settle. Right, for these kinds of cases, the insurer might offer you a proportion, perhaps, or it could well be a circumstance where the insurer says, really, this is a clear non-disclosure. I cannot make any offers to you. So there are a range of scenarios that really depend on what happened in that particular case.
Okay. Francis, anything to add?
Okay, as usual, I'm on the side of the consumer. So how can the consumer strengthen their hand? Okay, it sounds all very complicated. Contract depends on what the contract says, but simply follow these guidelines. First and foremost, if you're buying insurance, you have a duty to disclose everything that may be relevant to whether or not the insurance company is going to take up the policy for you. Okay? In simple language, if you are going to take up a medical policy and you've got, say, a pre-existing heart condition, all right, it is best to raise it and see what the agent advises you rather than holding back the information because you're afraid that if you revealed it, then you must pay higher premium. Okay? It's natural to think like that as a consumer. I do too. All right. But it is a sure way to get yourself into trouble in terms of non-disclosure of a pre-existing condition. So the general rule is when in doubt, disclose. Then how do you disclose? In this case here, rather than just casually telling the agent and says, oh, you know, I've got to wear these special shoes, he could have said something like, I have to wear these special shoes because I have problems with my leg. Okay. And if the agent says, oh, never mind, it's fine, tell her, please write that down in the forms that I'm going to sign. Okay.
Okay.
And that would be the best way to protect you, because if this case were then brought to FIDReC and it came before me, for example, as an adjudicator, that would be a clear indicator that disclosure was made. The insurance company chose to disregard it. There's no reason for them to be relying on non-disclosure as a basis to refuse the policy now. Okay, so it's really about you consumers knowing what your rights are and then asserting your rights. Think of it
Okay.
this way. If you don't disclose it now, you may not have the cover at the critical time when you need it. You might as well know now whether they are going to cover you. Otherwise, look for another insurance company. There are many out there.
Right, that's very true. Very true. Okay, with that, let's move on to the next topic so that we can cover more questions that participants have raised. Very quickly, I'd like to touch on policy lapses or the switching of policies. Now, Eunice, I am aware that even at FIDReC, sometimes you do face issues that arise from this. I myself am actually guilty of suffering the consequences of a policy lapse, which meant that, I ignored the letters that came in the mail and I thought that my insurance agent would call me. I did, right? But as is quite common nowadays, and which, by the way, was also a question that one of our participants raised, sometimes the insurance agent leaves. And, the insurer doesn't really appoint a representative for quite a long period of time. Meanwhile, we've ignored it, assuming that, the agent's going to take care of us, and then the policy lapses. And I think the other quite common problem is when we are tempted to switch policies. I know that there was a period when the MediShield Life was changed that insurers have approached people or to say that, their respective insurance companies now have better insurance policies covering, say, your medical coverage. Maybe they'll say that, oh, mine has better hospitalization plan, meaning that it covers maybe 180 days, then XYZ only covers 90 days, something like that, right? So as a consumer, of course, that's very attractive. And then we want to make the switch. So let's talk about what then happens, what are some of the dangers that you might face if you are tempted to do a switch like that, or if you let your policy lapse?
Thanks
Eunice?
for outlining the two situations, Liyen. I'll start with the switching since it follows quite
Okay.
nicely from our last scenario, right?
Yes.
So for switching of policies, one of the things that consumers should be very careful about is when you choose to switch from one insurer to another insurer, if you had any conditions that developed, right, between the time you got your first policy and you're switching, you might actually lose cover for these conditions which now pre-exist the second insurance policy, right? Whereas if you had kept your old insurance policy, right, you would still have had that cover because it only arose later, right? So in trying to weigh up whether it's worthwhile to switch, right? Because there could be a lot of benefits, like you said, Liyen. The payouts are better, right? There could be a lower portion of upfront payment on the part of the consumer and so on. It is still important to consider whether or not there is any change in your medical condition during the time you bought the first policy and when you're planning to switch. So this will be quite critical, and you need to consider this in deciding whether or not it's worthwhile to switch. But if you did switch and you came to FIDReC, we will of course take in your case, and then we will find out more. There is a requirement for insurers who are, knowing that you are switching from one policy to another. There is a requirement for them to actually explain to you what the risks and the disadvantages are of doing this switch. So if, right, there was no explanation of this to you, then this is a potential case where you could use this to bargain with the insurance company to see whether you can come to a settlement on this. So this is a case where it's very important to talk to the insurer, and also if that's not successful, FIDReC will help you in this negotiating process. We don't represent either party, but as a neutral third party, we can quite clearly see where might be a potential way of settling. Okay, so that is for the switching. And going back a little bit earlier to policy lapses, this is something that we want to remind consumers about. You said, Liyen, I would have thought my insurance agent would remind me, right? But often, because this is a contractual arrangement, although insurance is sold many times based on relationships, but ultimately, what the insurer owes it to you to do is set out in the contract. And you would find in insurance contracts that generally the obligation to make payment lies on us, the consumer. And also, if we change address, it lies on us to update the insurance company. So if notices are sent to us to the old address, right, sometimes we might miss that. And this is the sort of situation where we could run into difficulties. But if we had just taken a bit more care, these situations could be avoided.
Yeah, that's very good to know. Actually, on that point, I'd like to jump to slide 11, which is reading the terms of your policy, because as you were saying, right, we assume that we purchase the policy through a good relationship with our insurance agent, and to us, they become the representative of the insurer, especially if you're a really good agent, but sadly, sometimes they leave, they either jump ship or they've got a better job offer, and the insurer takes a long time. So I think it's a good reminder that ultimately, because it is a contract, we better make sure that we are more vigilant, because we are actually in the end protecting ourselves. And on that note, I'd like to talk about the insurance policy itself. If you have seen an insurance policy, as I believe many of us have, it is like a book. It's really thick. Typically, you get it maybe a week from the time your insurance agent comes, and then you sign on the dotted line, you make all your declarations. A week, 2 weeks later, something comes in the mail. It's like that. And I've tried to look at it. First few pages, all you get are definitions. What is I can't remember, condition, or what is an exclusion clause and things like that. It's very difficult, I think, to expect the regular consumer to plow through such a document. So maybe, Francis, to help us all, shall we talk about what are some of the really important terms that we should look at? Say now I receive my insurance policy, I've got it in my hand. Is there some, I won't call it a shortcut, but a better way, like a guide that I can use, so that when I receive this policy, and I do want to protect myself, but I'm clueless as to what all those things mean, where should I turn to? What should I do, and what should I look at?
Yep. Okay. Typically, in an onboarding process, you would have signed a lot of papers. All right. Two important aspects come up from there. One of the key things you would have signed would have been the quotation, whereby they call it a proposal that is put forward to the insurance company. So that is not necessarily your insurance contract. The insurance contract may come a few days later in the form of a booklet, neatly bound, looking very nice and neat and impressive, but most of us don't read it because we are either intimidated by the look or by the number of pages. What's important here is this: call your insurance agent. I know that we talked about the insurance agent, leaving or going away, but the chances of this person that just sold you the policy 7 days ago, 14 days ago, that person will still be around. After all, the whole point why the person sold you the policy is to earn the commission. Okay, so typically your insurance agent should be your first port of call. You say,
Okay.
I've got hold of the policy. Now I want you to take me through it. Okay. Now, typically the insurance agent could then run you through and you would be none the wiser. So here is a checklist of what you can ask for. With
Okay.
reference to your insurance policy in front of you, ask the insurance agent, what am I buying? Where does it say what I am covered for? So if it's a medical insurance, hospitalization insurance, typically there would be a schedule of all the benefits that the insurance agent should be able to point you to. If it is a savings plan, 21 years, so that you can save for your child's education, there should be a savings plan and the projection table as to what you are likely to obtain. And when you look at the projected table, don't be taken in by the beautiful numbers. Ask the person and say, how long do I have to pay the premiums for? What if the policy doesn't make the expected, projected
Yeah.
returns? What is the minimum guaranteed amount? These are things that you need to ask for. And then once you understand what is being covered, it comes with a price. That's the premium. So for the premium, ask them to walk you to the section in the plan whereby it talks about the amount of premium you must pay, how often you must pay that premium. Sometimes they ask you to sign a gyro form or a credit card payment form for automatic deductions. That's probably a good thing to do if you have already earmarked a certain amount to be paid out for these insurance premiums on a monthly basis anyway, because that will go back to avoid your problem of forgetting to pay the
Lapsing.
premium and your policy lapsing.
Yes.
Okay. Now, we skipped over a slide earlier, but I think this is something that we can touch on in this context still. Ask the agent, what is excluded? So,
Okay.
for instance, if you bought a travel policy, you think you're covered for everything, but there might be an exclusion clause in that policy that says acts of terrorism are not covered. If there is a government lockdown or a government action and you are stranded, that's excluded from your policy because it requires an additional payment. So, quite apart from what's covered, ask them to point out to you what's not covered. All right. And for each of these things, don't be afraid to ask the insurance agent to put any statements, representations, or things that they tell you in writing. It can be in the form of a letter that they write to you and say, I've explained this to you, and yes, this is your understanding, this is correct.
Okay.
This little effort goes a long way to avoid future disputes. And even if you have future disputes, someone sitting in FIDReC, whether it's myself or some other adjudicator, they would be able to use this as information in your favor. Okay, so these are
Okay.
some of
So
the
that's
things you
very
need to
useful.
look out for in your policy.
Okay, thank you very much. Thank you, both of you. I think we have only about 5 minutes to quickly go through some of the questions that our participants have asked. Some of them are interesting. So here it says, if I sign the terms of the policy and later I find that the terms are contradicting to each other or the original risk transfer is not achieved, where do I complain to? Where do I complain about this organization? I'm not very sure what exactly this person means, and I don't know if you understand the context of the question. When he
Okay,
later finds that the terms are contradicting to each other or the original risk transfer is not achieved.
okay. Let me try to put that perhaps in a simpler language. Let's say you signed up on the policy And later, when because you're very thorough, you decided to read through all the contract terms, and you found that maybe clause 13 doesn't, gel or contradicts with clause 23. Your first port of call should be to go to the insurance agent and the insurance company, telling them to clarify their contract. All right. And of course, your further recourse, if the insurance company is not willing to entertain you, is then to go to FIDReC. All right. But I think this consumer that asked the question is actually doing something right. He's actually aware of his policy terms, and I think that's always a good thing.
Absolutely. Okay, one other question by another participant. Must I disclose my P&C medical report? So this is interesting because we say we have to disclose everything, right, when we're purchasing an insurance, but sometimes we have medical reports that are private and confidential. Can he rely on that to maybe avoid disclosing something?
I think there are two parts to this question. The first is, if I have a P&C medical report about my existing condition, it doesn't necessarily mean that you must then go and give it to the insurance company or disclose it to the agent, because that's P&C to you. What is important is that you need to disclose your condition. Okay? You don't need to
Okay.
disclose the medical report regarding your heart condition, but you need to tell the insurance agent, hey, I got a heart condition, All right. What the insurance company responsibly would normally do is send you for a medical anyway. All right. And it is for them to decide the nature and extent of the risk and whether they are going to cover you. So to the consumer, you don't, full and frank disclosure doesn't mean that you have to disclose all of your, private and confidential documents, but you should give information about the condition so that the insurance agent and company can take the necessary steps to do their own investigation.
Okay, that's fair. Okay, one last question. And this is to Eunice, I believe, because it's regarding FIDReC. It says your terms of FIDReC say that the decision is binding only on the monetary portion, not on the contractual portion. If the entire case is about a specific clause that violates the contract of insurance, but the policy owner did not incur any cost or damage, will FIDReC be able to prescribe the insurer, I assume that the adjudicator, be able to prescribe the insurer to change the terms of the policy? So I think the question is, if it's not a monetary claim, but you want the insurer to change the terms of the policy.
Okay, so let's just start with the mediation stage first. At the mediation stage, we are not concerned with the money involved at this stage, right? We're trying to see what is the difficulty the consumer is facing and whether there can be a solution on the insurance company's side. This will involve asking yourself what exactly you want from the insurance company. If it is not a sum of money, it's not some form of compensation, you didn't suffer any loss, what is it? Is it you want them to clarify a certain term? You want them to, promise that they will cover you for a certain condition? You have to explain this and be able to, articulate it to FIDReC, and then we can help to see whether during the mediation there can be some kind of solution along those lines. For the adjudication stage, because the terms of reference compel the insurance companies to obey our adjudicators when it comes to monetary sums, the adjudicator cannot force the insurance company to take actions, right, apart from paying out sums of money. But the adjudicator can make a recommendation. So this is for the insurance company to then go back and consider. Our experience with our cases so far is that the insurance companies tend to behave in good faith. So if there is a recommendation by the adjudicator that something needs to be looked into, or for example, the adjudicator might say, it turns out, the claim is not objectively made out, but ask the insurance company to consider, making some form of service recovery, doing something for the consumer. Often the insurance companies will follow, right? But
Okay.
the consumer is very observant and absolutely right. These sorts of recommendations do not bind the insurance company.
Okay, okay. That's very helpful. Okay, I'm afraid I have to bring our Q&A session to a close. It was such an informative session. Thank you very much, Francis and Eunice. Once again, participants, thank you all for your questions, but please remember to download the materials that FIDReC has kindly made available to all of you and download it before the end of this seminar. Also, please visit fidrec.com.sg if you have a dispute with an insurance company. And if you wish to sign up for the free legal clinics organized by the Law Society Pro Bono Services, please call 6536-0650 or visit our website www.lawsocprobono.org. We hope you found today's discussion on life and medical insurance helpful. Your feedback will help us make future webinars more relevant and useful to you. So once you leave, you will receive a survey, and we will really appreciate your feedback on today's session. Finally, thank you so much, Eunice and Francis, for spending the afternoon with us. On behalf of Law Society Pro Bono Services, the Financial Industry Dispute Resolution Center, and our panelists, thank you for joining us and have a great evening.
Thank you, Liyen. Thank you, Francis.
Yep,
Thank
thank you,
you.
Liyen. Thanks, Eunice. Okay, it's a great time. Thank you.